In my last video, I took a look back at 5 penny stocks I invested in 5 years ago. One of the names I briefly mentioned was Workhorse Group, a company I was once heavily invested in and incredibly bullish about. That mention sparked a lot of curiosity. So I decided to dig in again. And what I found was really surprising. Welcome back to Stock Spy, your secret source for deep dives, hidden gems, and financial intel. In this video, we are going to peel back the layers of Workhorse story, the rise, the fall, and what I believe is the future. First, let's go back to 2020. Workhorse was one of the most hyped electric vehicle stock during the EV boom. Back then, it wasn't just about Tesla. Investors were hunting for the next big disruptor. And Workhorse seemed to be a real good contender. Well, why? They were developing electric delivery vans, targeting a sector ripe for disruption. Even more, they were running for a massive USPS contract, a multi-billion-dollar deal that could have changed everything. The stocks skyrocketed to over $40 per share at its peak, fueled by retail enthusiasm, institutional buzz, and pure speculation. I was a Workhorse bull during that time. I believed in the vision, the story was strong, and the EV sector was booming. And the USPS contract that looked like the crown jewel. Now here is the twist of how I got lucky. By pure luck, I sold my Workhorse shares just a few hours before the USPS contract decision was announced. The stock was trading in the low 20s at that time. I wasn't expecting it. I didn't have any insider info. I didn't predict it. It was sheer dumb luck. And what happened next? After the announcement, the company didn't get the contract and the stock tanked. That moment taught me a valuable lesson. Sometimes, your biggest wins come not from brilliance, but from randomness. And you have to stay humble to recognize that. So, fast forward to today, 2025. Here is where Workhorse is now. Is there any life left in the company? Here is what I found. Number 1, they have a lot of production struggles. Workhorse has struggled to scale production of its delivery vans. They have faced recalls, regulatory scrutiny, and manufacturer inefficiencies. Despite promises, the road to mass production has been very bumpy to say the least. Let's check the financial health. The company has burned through cash and has to dilute shareholders several times to raise capital. As of their last filings, revenue remains extremely modest compared to what was projected back in 2020. Losses continue to mount. There has been constant leadership changes. Workhorse has seen a rotating door of executives over the past few years. While the current leadership is focused on stabilizing operations, it's clear that investor confidence has taken a hit. Last but not the least, competitions. EV space is far more competitive now than in 2020. From legacy players like Ford and GM entering the commercial EV market to new entrants like Rivian and Canoo. Workhorse is up against giants with more resources and more stable execution. But this is very important. It's not all doom and gloom. Despite its many missteps, Workhorse still owns intellectual property and has a small but functional manufacturing capability and is attempting to pivot into new delivery and drone technologies. It's not entirely dead. There are still embers in the ashes. So what can I recommend for now? Well, for first off, this is important that I no longer own any Workhorse shares or put option. This is only financial. This is not a financial advice. This is just an unbiased opinion based on what I've observed. Here is my honest take on this. Workhorse today is a speculative turnaround story, not at all a growth stock. If you are looking for a moonshot investment and are willing to take a very high risk, it may warrant a tiny spot on your radar. But this is not a stock I would personally bet heavily on at this stage. What I've learned from my experience so far is hype doesn't build the business, execution does. And while Workhorse has the hype, it has consistently not delivered. For now, the stock is trading in penny stock territory. Its market cap has shrunk. Analyst coverage has thinned. Retail interest is minimal compared to 2020. But sometimes that's exactly when contrarian opportunities emerge. Do I think Workhorse is going to zero? Not necessarily, but it would need a series of significant wins, including contracts, product launches, and capital raises to mount a serious comeback. That's a tall order, but definitely not impossible. So, would I invest again? Maybe, but not definitely at this moment. My focus has shifted to companies with stronger fundamentals, clearer path of profitability, and management teams with proven track records. And at this point of time, there are better stocks to invest even in EV space to put your capital to work. Still, the story of Workhorse is an important one. It's actually a cautionary tale about believing in hype, about timing, and about understanding that stock market rewards execution and not dreams. If you found this video insightful, consider subscribing to the channel. I've got more deep dives coming. If you have a company you would like me to investigate, please drop into the comments. Until then, stay sharp and stay curious. Thanks a lot for watching.